Calls of the day. We start today with Regeneron. Top pick for 2026, $800 is the price target at Wolf. Jenny, you own the stock.
We sure do. We've owned it for a long time. And it's interesting that this is their top pick because it really follows on what Joe was saying about what's outperforming today. It follows on what Liz was saying about value doing well into 2026. So here you've got a company that trades at 16.5 times earnings, has a 5% free cash flow yield. They've got 20% earnings growth. Shares are down 1% this year, and they have one of the biggest drug pipelines in the whole pharma biotech space. They have Dupixent, which continues to, that's the one that grows at 20%. Earnings weren't growing at 20%, but earnings have decent growth ahead. So you've got a reasonably cheap stock, great earnings growth, their main drug growing well, doing nothing. And I think, if these two are right, that's where the momentum goes into the next year.
All right.
So
speaking of top picks, Booking Holdings is called one at BTIG. $6,250 is the new price target. We see the makings, they say, of what should be a good year fundamentally. What do you think, Carrie?
Yeah, I like it. I think maybe 2 or 3 weeks ago we talked about it because it was really down sharply, and I said I thought that would recover because consumer spending is still strong enough to carry the travel industry, and you've seen the stock is up 14%, so we like it here. All
right, General Dynamics, top defense pick, $400. You get the theme. A lot of firms are making top picks in various sectors. Top defense pick is GD, General Dynamics. $400 is the target. Wolf, the firm. Joe T., the owner,
has had a very nice rally from the April lows, and it's kind of been trading above its critical support of moving averages, pulling slightly back into the 100-day right now. So technically, if you look at that stuff, it's a great place to buy it. From a fundamental perspective, I think General Dynamics sets up really well when you look at U.S. defense spending, which has a priority on naval assets, in particular in the South China Sea, where we have literally a third of all global trade. So wanting a strong presence there, building up naval assets, that's exactly where General Dynamics can leverage the opportunity with the Department of Defense.
Okay. Fiserv is having its worst year ever. The stock is down 68% year to date. Mizuho says outperform. They reiterate that. They still love it. 110 is the target. Jenny owns the name. Make Fiserv great again, is what they say. Can you?
I think the price target's really interesting. The stock's at 66. So if they're right, it's almost a double from here. It gets it back to where it was before it took that huge hit a few weeks ago. And we think that they're probably at least directionally correct. Here's another one. 8 times. Okay, so in their note they said management is laser focused on getting it right and getting it back on track with growth. If they're right and they're back to double-digit earnings growth, you've got a stock that's got an 8 times earnings, an 11% free cash flow yield. It's a good company. They actually produce lots of revenues. They have Clover. So when you go check out, at a lot of small businesses, it's Clover that you use. That's a real product.
All right, so why is it down 68% year to date?
Oh, they had this huge issue with their sales to Argentina and going back, and they brought in a new management team a few months ago who came in, or maybe it was about a year ago actually, who came in and said hey, the Argentina business really has been the primary driver of growth. Everyone just kind of freaked out. So now there's a credibility problem. So you need to get credibility back. You need to get it back to this double-digit earnings growth, which I had for years. But that growth needs to be seen as more broad and not focused because of currency, drivers coming from Argentina for years. So there was a real issue there.
Okay,
yeah, but they still make
the market likes to call.
Yeah.
You're looking at me like you want to say something.
No, I'm not being critical of your position. I'm actually questioning you as a shareholder. Do you feel as though management has done a good job in navigating the challenges? Because it's not just been one earnings report; it's been several earnings reports.
Well, obviously not. She's already said that it's a credibility problem.
Well, it's tough, and so this is the thing. So you have a relatively new management team, and they came in and were kind of like, whoa. Right, so it's a couple quarters where they're trying to figure it out. I think they kitchen sinked it this time to really say, let's clear the decks. So you definitely need 1 or 2 more to see what this team's doing and how they're going to get it back, and will they really be able to. We're in a weird spot with it where we've owned it for so long that we actually still have a slight gain on it, but we think it's really undervalued. That $110 price target, I'm not so sure. So we may take some off the table next year. I said when it traded down the first time, and I was on, I said, look, we will use it as a tax loss, right? We might buy it back
well,
after the tax loss.
$110 would have looked good at the beginning of the year.
Oh, yeah,
not
it
now.
did.
66
No, not now.
or whatever it was.
So it's a tricky one. So we have like some people with gains, some people with big losses. We have a tax loss that we could use. Do we need to use that this year? It's tricky.
It's a pretty bad streak, though, of 4 consecutive quarters where you see significant declines post-earnings.
That's why
correct.
Somebody says that it's a credibility issue.
Yeah.
Okay.
But it's not the same old management, right? It's a new one. So you got to give them a chance to get it back.